It is March 26th. This is, of course, the video log that takes 20,000, 30,000 to a million. And after I take you through the account and show you some of the latest updates, I'm going to talk about getting back into gold because it has come up off the price, and I think it's time to jump on with a very particular pick when it comes to gold miners. So I'll be discussing this after I take you through the account. I'm sitting at nearly 150,000, 149,000, which is very close to what I've been hovering at this whole year. Up and down 5K here and there, but basically the same valuation of my account. Now, there's been some winners, some losers. I think the biggest letdown has been the largest part of my account, which is Apple. And I've been trying to kind of rebuild the losses through other plays. And I'm totally content accumulating more and more Apple. Now, I'm going to run through the account really quickly so you can pause the video at any moment to try to figure out the exact position. So I'm going to have the option ticker symbol here first, then the strike price, whether it's a put or a call, expiration date, number of contracts, whether it's a sell or buy. And of course, you're going to see a ton of EBIX going on because right now I'm in the middle of this battle with EBIX, and I will update you on how it goes eventually once it happens. So I'm just going to have to stay put until April 20th, which is apparently when some of these numbers are going to be finally released of last year's earnings and all these all the revenue disputes and all that stuff. So there's big controversy about this company, and if everything turns out the way I think it should turn out, or I think it will turn out, then it's going to be hopefully a big windfall for me, and then I can really boost this account up. But if things don't work out, then I might see a loss here, and it could be substantial, but it's not gonna, I don't think it's gonna make too big of a dent, an unrecoverable dent. Anyways, I'm gonna scroll down quickly through the positions. Feel free to pause at any moment. Like I said, most of this is just a bunch of EBIX options plays, and I also have a ton of shares as well. You can see here that I have 670 shares, and I've managed to bring my Apple position up to 500 shares, which is a very substantial amount. I think it's like almost 40% of my account now. So everything else on the account though is doing really well, especially today. There was a big bump in the last hour where my account swung about $5,000 from being down 3,500 to being up almost $1,500. So I'm very happy about that. And this is the last of my positions. Verizon's been doing really well. I thought it was just free money at below 55, so I just accumulated a lot around that price, maybe about $5,000 worth. Okay, so that's the account. Now I'm going to talk about a little gold talk. So gold's been hovering about $1,730 per ounce in this pullback from my all-time high of 2150 or so. Now that's a pretty good give back. It's a pretty healthy correction. Some could say it's in a bear market and gold's kind of losing its luster, but I think it's a pretty normal consolidation period, especially for something like gold that gets in these big up and down swings. Now, I think I've been patient enough and with gold, and I just don't want to miss the opportunity on the next upswing, which could take us to more all-time highs. And I think that could happen in the next year or two. So the gold could correct further all the way down to perhaps 1,300 or so. I'm not a technician. I don't have a specific target in mind, but that would come pretty close to the all-inclusive costs of a lot of the mining companies, which would severely, start to restrict supply. But I don't think it's a supply game at this point. I think it's more about the demand. I think the demand is going to increase for the metal. not only for electronics as the world is getting wealthier, but as the world gets wealthier, I think that they will look for alternative means to preserve their value. They're not just going to look at digital assets. There are going to be some people that are still left that find value in physical objects, especially traditional gold, traditional preservation tactics like owning physical gold, for example, that's worked for thousands of years ever since the dawn of civilization. So there's going to be plenty of people that are looking for that. Not only that, but as the population of Earth increases, there's going to be, of course, more jewelry demand, and there's more space technology that's coming online, which is not a very big demand factor, but also gold is still used very heavily in dentistry, and as the global population starts to become wealthier, they're going to look for those premium materials to construct higher quality products for themselves, for their health, and for their gadgets, and also to make themselves decorated. So I think that gold is going to be in demand for sure, in my view, in the future, most notably as a currency hedge, because of the massive money or currency infusion from governments around the world, including the US, with stimulus checks and especially loaning practices and the bidding up of prices, which is going to force inflationary pressures for people. And not only that, but I think that especially with commodities getting a little kick in the behind as of late, the cost of the production of goods is increasing as we speak, and that's also driving inflation. So now if you have wealth and you're looking to preserve it, and tech stocks is not doing it for you at the moment, and you're looking for an alternative, it's gold is one of the very few places that you can hide right now. And at these prices, it kind of looks like a bargain to me. It's almost as good as a bargain as that $1,300 level a few years back. So I'm thinking about jumping on the train, and what better way to jump back on the train than investing in a company that's making a ton of money through this gold trade, which I have identified as, wait for it, Kinross Gold. Okay, Kinross Gold. So I actually dumped this company back in the $4.60, $4.80, $5 range back in 2019, and it did correct afterwards, but I never jumped back on the train, and I'm kicking myself in the behind for that. But now, at $6.70 or something, it's actually looking like a very attractive purchase. Some of the numbers on this company look just absolutely incredible. Okay, let me just show you here. First off, you have a PE of 6.35, forward PE at 6.54. I mean, so the company is an $8.4 billion company. Its sales are $4 billion, and it makes $1.348 billion, $1.34 billion in profit, which is a very, very large amount. Some of the most impressive figures I've ever seen out of gold miners is return on assets is 13%, and their profit margin is 31.9. So they have some of the highest profit margins that I have seen, or at least from a sustainable level, in the mining business, gold mining especially. That's probably because for most of my investing career, I guess, I've been looking at declining prices in gold, but they have been rising, of course, in the last few years. But I've just had my investments a little bit on autopilot, so I have been tracking them. But these kinds of numbers are very eye-popping to me. So here's some more eye-popping numbers. A dividend of 1.79%, which is very good for gold miners. You could call this a dividend play if you want, but what's really amazing about this dividend is that the payout ratio is only 5.6%. Now imagine having a payout ratio of 5.6% and you're paying a 1.7. Actually, other sources peg the dividend a little bit lower, around 1%, but it's really relevant. That means you could be, if you wanted to, if you were Kinross Gold, you could pay a 20% dividend and cover your costs, have a payout ratio of 100%. So not a lot of companies can say that. They could really return the cash to their shareholders. Now, there are other ways to visualize this movement of money. So they have a dividend of 12 cents per share, and they have a cash of about $1 per share. So they have, 8+ dividends that they could pay out with just the cash that they're sitting on their books. But they can use, you have a very steady, secure stream of money no matter what happens for the next couple of years. And you can pay off a portion of your investment right off the bat with that money if you're willing to wait for it to come to your account. Now, another way to look at this cash is the optionality of restocking their coffers, meaning buying more gold in the ground in order to mine it profitably. And they do mine gold very profitably. At least in my opinion here, their all-in sustaining cost has been $1,013, and they're looking at $1,025 for 2021, which is very good if you're selling gold at at current prices, and they were selling it at average price of $1,850 last year, which is very good. The all-time high, of course, was $2,150, but as an average price, $1,850 is I think decent. I don't know how exactly it compares to other companies, since I haven't done that much homework on the other companies as of late, except I don't have the figures on top of my head, but I know that I've been looking at Newmont and Barrick Gold, some of the big ones there. And I know that they're doing really well. I know that Newmont especially, looked at the figures and they look really good. What I don't know about Kinross Gold is what their future projects look like, what the condition is, how much gold in the ground they have, and what their prospects for mining it profitably is. But that all-in sustaining cost gives me a lot of information to make a judgment on their future production, which I think, if according to their guidance, looks very promising and very stable. So I think that there's zero reason, outside of the fact that you may think gold will fall all the way down to 1,300 or below. Other than that fact, I think there's zero reason this stock should be sitting at the valuation it is right now. 6.75, let me check again. 6.72 for this company. And it looks like I'm not the only person that thinks this, because the target price on Finviz here shows at 11.68. The margin though are just absolute killer. ROA 13.1, profit margin 31. Now I don't know how repeatable that is, of course, this year, because gold is not at the same elevated price as it was last year at one point. However, if my prediction, if my thesis is correct, that all gold prices are going to be bottoming out here in 2021 and then lifting back up towards the end of the year, if I have the patience of a year or two or three, then I think Kinross Gold will pay off. Now, I haven't bought the stock yet. I'm planning on getting into it, but hopefully I get under $7. And I might just try to sell puts against it and see if I can collect some better prices. But I actually haven't built out a position, but I'm really thinking about it. I might actually wait until some of my eBucks cash frees up and then reinvest heavily into Kinross. But I haven't exactly decided how heavy or when exactly I'm going to get in. But right now actually looks like a good time to buy Kinross Gold, and I wish I had it. I wish I hadn't sold all along, but you know, actually I swapped some of the investment for investment that went up like 100%. So I can't complain too much, but I did leave half of it in cash, so you can count it as a 50% gain. So it's not too bad, but I could have saved a lot of headache and exercised some long-term capital gains locks on this stock. So that's Kinross Gold. I'm really excited about it. Forward P's crazy, current P's crazy. Operating all the margins are crazy. Dividend payout ratio is the lowest I've ever seen for such a heavy dividend. And also the employee to market cap ratio, which is a ratio that I like to look at for companies of various businesses, is pretty good. I like the fact that it only has 9,000 or so employees, the company, and it's over an $8.5 billion company. So that's fantastic. I'm really happy about that. Well, that's my pick. This is how I want to play it. I'm looking to get back into the gold market, especially if the gold keeps falling lower. I think that if gold goes down below, 1650, it's going to flush out all the technical buyers and sellers. All the technicians are going to be, writing the eulogy for the metal, the gold metal. But I think that quite on the contrary, they're going to be marking the bottom. So I am looking for yet another flush out. It might not happen. We could have seen the lows in the gold market, but it could. Obviously I can be wrong. I give it another 30% chance that it's going to go all the way down to back to 1300s or something like that. It's definitely possible, but I give it about another 30% that it's already bottomed out. So that's my opinion. Hopefully you'll have some feedback on this pick. Maybe you own the company. Maybe you know something about it that I should know. Maybe their reserves are just diminished and they don't have any more gold in the ground. They have to pay a lot of money for more reserves. So if you have any knowledge of this company, please let me know so I can make a better judgment as I continue to research and try to find out if this is a good opportunity for me or not. All right, I'm gonna end it right there. I just haven't had time to make a lot of videos this week, so I know I'm just making one on Friday here, but Friday night, hopefully next week, I'll have more time to update you more on what's going on. All right, that's it for now. Peace out.